Our next story is on the U.S. stock surge amid the U.S. presidential election and its implications for South Korea. For more on this, we turn to Lee Kyung-min from the Korea Times, who's on the line for us. Good morning, Kyung-min. Can you brief us on how markets performed on Friday?
Of course, the local stock market, Kospi closed at 24,1650 Friday, gaining a 0.11% from the previous session. Friday's gain was the continuation of the weekly gain of 100 points to 2,400 from 2,300. Besides the main bourse, the secondary tech-heavy Kosdaq also topped 840, up from 800. Market watchers say the bullish run is likely to continue for the time being, given the U.S.'s largest stimulus package to date, including investments into infrastructure and electric vehicles and fuel cell electric vehicles, among other future-oriented business. As for the outlook for the Korean economy overall, local think tanks say the government will have to increase its preparedness against politically charged demands from the world's two largest economies, which are, of course, the U.S. and China. Otherwise, the export-reliant Korea could see its economy taking a major hit, as evidenced by the fallout experienced in 2017 amid an intensified feud over the deployment of the U.S. Terminal High Altitude Area Defense, or THAAD, the anti-missile defense system here. They say Korea will be able to become part of a supply chain to be set up by the U.S., though, as the U.S. is seeking to cut its reliance on China amid the pandemic, and this is a move prompted further by the growing risks now associated with offshoring. Others say that Korean firms operating in the U.S. will face calls to improve conditions for local workers, given they are key voter base of the union-backed Biden, whose close aides are likely to be filled by those prioritize labor and environmental issues and values over global trade promotion.
Now, Kyung-min, how did the U.S. presidential elections affect markets in the United States?
Well, the Wall Street continued a blistering rally that gave the market its biggest weekly gain since April, but that ended with a breather last Friday. Last week's blockbuster gain was led by hopes of a massive stimulus package to be injected to tackle the COVID-19 pandemic. So the S&P 500 index inched down less than 0.1% last Friday, but it did little to shave off the blockbuster gain of 7.3% during election week. Last week's gain more than offset the steep losses from the week before, when the market tumbled due to uncertainty surrounding the election. And other reasons why the stock market took a hit included the start of a lockdown in Britain and the possibility that the U.S. could put more curbs on economic activity following an increase in the number of coronavirus cases. With the uncertainties not completely gone, stocks still surged because investors expected that most of the business-friendly policies are likely to stay in place after early elections results indicated a split Congress between Democrats and Republicans. What this means is that a Congress closely or equally split between Democrats and Republicans is likely to push for anti-business policies than a Democrat-controlled Congress. But market analysts say that caution is still needed since more volatility could be in store, given all the remaining risks in the market that widely fluctuates, even at the inkling of a bad sign reported on the news.
Now, thank you as always for your report. That was Lee Kyung-min from the Korea Times.
Thank you. My pleasure.